Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. So the bears came out swinging to start the week. The end of the week bounce last week was held together by duct tape and tweets, pretty much. So we knew that bounce didn't have a whole lot of follow through behind it. The tech sector was still seeing weakness, and QQQ did not break the daily lower high pattern of every day being a lower high. So we started the week this week with significant downside action and no tweet to save the bulls. So we're now looking down at the low of last week, 267.01. The bulls must hold that level if we do get bounce follow through, which is not looking as the likely scenario as we closed week. But if we do get bounce follow through, we will then look for a lower high compared to 274.75 and a mini tightening range. Keep in mind it is the holiday week. We have no trading Thursday. We have a half day Friday ending after the morning. So it's going to be a low volume week. And the closer we get to the holidays, the less volume we're going to anticipate. But if we get an inside bar tomorrow, that's pretty much the best case scenario for the bulls to hold 268.07 support. Right now on the weekly time frame, we're not confident that our higher low has been established yet on the weekly chart because of this weakness, and we can see SPY at the end of the day, this bounce has no follow through. This long lower wick is a fluke. If you look on the 5-minute time frame, there's nowhere near enough volume for the price to have dropped $3. So ignore that long lower wick. The low of the day was 268.07. But if we look at the hourly time frame, this is a weak bounce attempt. I would love to see the market open in between the low of today and the high of the end of the day bounce attempt, which would put us between 268.07 and 270.25. Why I want to see that happen is for clarity. If we were to break one of these levels in extended hours and then start the morning above or below, it's a less trustworthy move. Whereas if we start in the middle of that range and then we get the bull volume or the bear volume and the break in regular trading hours, that can be more believable. So I would love to see QQQ and SPY and all these individual names open within this range. If we break the high of the bounce, we look for further follow through as there's a lack of resistance. And if we break support, we know another leg down is coming to 267.01, the next support level. IWM, same scenario as SPY, held the low, 148.13 key support, likely to be tested tomorrow. Weak bounce at the end of the day on the hourly, and we'll watch the same range. High of the bounce attempt and low of the day as the key levels to watch. Weekly time frame, 100-week support being tested. Bears have control. Every red day that we see from here in this market increases the odds that we're going to break the October dump lows, and the tech sector names are already doing it. Facebook broke the dump low, Netflix broke the low, and SPY is holding up well above that October low right now thanks to the financial sector. Here's QQQ, broke the low of last week, and here we are. The only support left is 160.09, the October low. It's the tech sector that led the way up for the last 2 years since the election of Trump, and it's the tech sector leading the way down on a significant pullback. Lower high on the weekly, and if we drop down and break 160.09, it will be a clear lower low, and then we're back to the February levels. 153.28 would be next after that. All about the October lows. QQQ and the tech sector is going to break. If it's going to break far sooner than SPY will. So that's going to be our first red flag as well, and then we'll see if the financial sector weakness creeps up and takes SPY with it. But right now, the financial sector is holding on fine. It's a daily inside bar, hardly even any pullback. We're not even close to last week's low. So right now, the financial sector is doing everything it can to hold this market up, and it's just the tech sector that is significantly pulling back. So we're not seeing bullish action to counterbalance that tech sector weakness, but we are holding up. If we see the financial sector roll over and see a bear break of 260, make that 26.54 tomorrow, that's going to be significantly bearish because, again, right now, the only thing that held up from SPY breaking 267.01 support today was the financial sector holding up. Weekly time frame, inside bar, currently forming, long way to go this week. VIX bulls showed up. New daily higher low is 1810, and we knew to be looking for this higher low as it was likely SPY was going to set a lower high. It just happened quickly. So our new support is 1810, and the bulls would love to see a break of 2297 to confirm a daily trend change and have us looking back up at the highs. So the bottom line is The bears are in complete control, led by the tech sector. We had a weak end of the day bounce attempt that gave us a new resistance level to be watching tomorrow. If we get a bull break of that resistance in these markets, we then zoom out to the 4-hour time frame and just look for a lower high to form because of the size of the dump. So there it is on SPY, and here it is on QQQ. For both, we would just be looking for a lower high. So the bulls are a long way away from seeing any kind of significant bounce with follow-through at this point, which is why the bears have so much momentum in their favor. So just keep that in mind. And as we're looking for short-term bounces, keep short-term in mind as a keyword. It's fine to be looking for longer-term entries. Just make sure there's a support level nearby to be utilizing as a stop, and make sure, ideally, to put your stop level at break even. If I'm looking for, an Apple bounce to follow through, I don't want to try and catch a falling knife as we're dropping down to lower lows. I want to wait for some kind of support level to be established on a shorter-term time frame. Perhaps the 15-minute trend change is where I make an entry. But at least at that point, I have a low to put my stop below, and I can exit if we get any kind of bear break. And if you're looking for longer term positions, you're waiting for the daily trend to change. Apple has been in a clear downtrend at this point ever since the 1st of November, an entire month of a downtrend at this point. If you're looking for long-term entries, rather than catching falling knives, patiently wait for daily trend changes to shift that momentum, and you're going to give up a little bit of reward, not nailing the bottom, but you're going to give up a lot of risk as well by not trying to catch that falling knife. So bears in complete control, and we'll see how that range, low of the day, high of the afternoon bounce, we'll see how that breaks tomorrow morning. Appreciate you watching. We'll see you soon.